how should I invest my money? I hear that all the time. That is probably the number one question that I get. And I figure we should go through what investing means because there's a lot of different ways you can invest money, and people don't think of the different ways you can invest. They only think of maybe a stock that you can buy or something like that. So let's go through the many things that you can invest on. And I'm kind of simplifying this. You can get very logistic on what alternatives mean or something like that. But let's kind of just go through the basics. So first and foremost, you can do what's called a high yield savings account. That is not technically investing your money, but you are getting a rate of return higher than the traditional bank account. So, that can be considered a form of investing. CDs can be considered a form of investing. Investing is really like, when can we expect to have a rate of return on our money? Right. You can do government bonds. So like US Treasury, TIPS, those kind of things. I bonds are ones that people have talked about a lot lately. Corporate bonds. So you can buy individual corporate bonds like, Apple's corporate bond or Google's corporate bond or something like that. Or you could buy bond funds, which are geared towards corporate bonds rather than a mixture. You can also buy bond funds that are a whole host of different things. So sometimes like total bonds and things like that can have both US Treasuries and have some corporate bonds in them, right? So you can have the best of both worlds. Now, investing in the markets, traditionally you can invest in mutual funds, in ETFs. We can do a video on the difference in that. Maybe we should. You can do index funds. You can do, individual stocks if you want to. So you can buy an individual company. Or you could, like I said, you could buy an individual bond if you wanted to. Those are available to you. You can do alternatives and cryptos. Those are available as investments. You could invest directly in a business. So sometimes when you listen to podcasts and stuff, they say, oh, he's such a great investor. And then you realize that he actually has given money, funded a company, was a funder of a company, and gave some money and got a rate of return. And that's a very interesting way to do it. But you also want to make sure that you understand what capital you have, what rate of return you should be expecting, that kind of thing. So that's a very complicated thing. If, let's say, your friend says, would you invest some money in my business? That's something you really should go through the numbers with a professional. And then real estate. So real estate could just be investing in your own home and having the equity go up, hopefully, for the most part. Or you could be buying, duplexes and apartment buildings and individual properties for real estate, for renting them out. You could be doing a lot of different things. You could also do real estate investment trusts, which are companies that are investing in real estate and doing the work for you, and you're just sitting back and hopefully having an upside on it. Sometimes they're downside, right? They're risky just like everything else. So there are lots of different ways that you can invest your money. I get asked, what's the best thing to do? And my answer is a combination of a lot of them. A combination of many of these different things are probably the best way for you. And people roll their eyes because they don't want to do that kind of work. And I understand that. But a lot of times a well-rounded portfolio might have some high yield savings accounts, might have some CDs, might have some US Treasuries, and also might have some ETFs or index stocks. And might also have some individual stocks, and maybe they're investors in a business or two, and they have some real estate. Sometimes it's best to have a mixture of different things so that if let's say the real estate market, like in 2008, drops out, then we're not having all of our eggs in one basket. It's much easier to put our eggs all in one basket. Like, let's just put it all in real estate. Real estate's the way to go. But actually, if you listen to a lot of modern day thinkers when it comes to money and growth, real estate isn't as lucrative as people think. If you really think of the rate of return you're getting, the risk that you're taking, and the amount of income or expenses you put into it, possibly you're not getting as high of a rate of return as you think you are. So you want to go through each one of these different areas and see what fits and what doesn't fit, and not go all in one area because that's what you know. So that's what you're going to do. To be a really well-rounded investor and to honestly have the best type of portfolio for yourself and for growth, you need to have a bit of everything. Now, does that mean you have to go out and find a business to put money into? No, you don't have to have that part. You can do that through investing in stocks. Even if you just bought the S&P 500, you are buying a piece of all the 500 largest companies in America through the S&P 500. So that is a form of that without having to take that individualized risk. But I just wanted to kind of go through what these different types of investings are. It probably is making your head spin, which is okay, because you need to know what's available to you so that you are able to make the right choices for yourself. And at One Vision Retirement, we actually help you build out the right mixture for you and what you are trying to accomplish. One Vision Retirement, your retirement in 2020 vision.